Welcome back. You're watching Market Fatafat right here on ET Now, show where we talk about all the stocks that are moving in trade based on news flow as well as technicals. Talking about technicals, now we have Osho Krishan joining us on the show. A very good afternoon to you, Osho. Thank you so much for joining us on ET Now. And first stock that you're going to talk about is DCM Shriram. Why is this one in focus? What are the charts indicating to you? Do you think that they are reflecting a bright green buy sign?
See, overall, from past 1 year, DCM Shriram has been consolidating in a very broad range. But when we are looking at the technical parameters, then it has formed a very strong rounding bottom formation, which is a very positive development on the technical parameters. So from here onwards, 1100 will be the first mark that should be acting as the crucial resistance zone. And once it is able to breach the zone of 1100, then from there onwards we can see a very strong rally of approximately 3 to 400 from medium to long term perspective, because this formation has formed in approximately 1 year of time frame. So I'm expecting that from here onwards a strong rally can be seen from a medium to long term perspective in this counter.
Let's move on and talk about Varun Beverages, and this one is in focus on the back of a brokerage note that we have from BofA, where they are maintaining a buy rating on this one, but they've increased the target price to 1030 rupees per share from previous 925 rupees per share. They're saying the strong growth momentum that they believe could sustain going forward for the company. On that, obviously distribution, that's quite strong for Varun Beverages, and that could see an upside from upside in terms of the current side as well. Other than that, Sting, that has been performing quite well for Varun Beverages, and that furthermore could be the next level of growth for Varun Beverages. Product scale up is possible over there as well, and territories and product lines is something they would be focusing on, which would lead for the growth for Varun Beverages. That's why a high coming in the target price, and as of now, look at Varun Beverages, all charged up in trade, up 4.9%.
Absolutely, all charged up in trade. That is Varun Beverages, almost 5% uptick coming in that particular counter. But let's talk about Puneera FinCorp, and why is this particular counter in focus? Because they've got a nod coming in from RBI to issue co-branded credit card with IndusInd Bank. The company is envisaged to launch this credit card within the next 3 months, is what the company actually said in their statement. They also mentioned that this partnership will enable Puneera FinCorp to usher in a new age of flexible and versatile retail credit. This is what the company informed, and looks like among the rest of the positives, this one is also working well for the company. 1% uptick coming in for Puneera FinCorp.
Almost 2% actually.
Actually 2%, yes, right.
Almost 2% now. But Osho, on the technical front, how is Puneera FinCorp looking to you today? Buzzing on the back of a news flow, but over the next 6 months or long term, how do you look at the view for Puneera FinCorp?
See, on technical parameters, this counter has seen a very strong rally in the current financial year. From the zone of 280, it has marched towards 420, 440 levels, and then from there onwards, in the last 3 to 4 weeks, we have seen a very decent correction. So on technical parameters, the counter has retracted 50% of the whole rally in the current financial year. So that means it is a very strong support. It is currently placed at a very strong support zone around 360 to 365. So 50% Fibonacci retracement of 365 should be acting as a very strong support zone, and one should try to accumulate this counter at the current levels, because even on the other technical parameters, the counter has already undergone the oversold territory. So from here onwards, we can see a very strong upside in this counter. Near terms, 420 to 440 should be the potential target for the company, but from there onwards, one can even expect a higher target in the coming medium to long term perspective.
Alright, so that is Puneera FinCorp, the technical view as well. But Lisa, let's talk about GR Infra, and why is this one in the spotlight today?
Right, Cheryl, it's trending lower because this is on the back of the bid on the ropeway project that they had won way back in Feb 2023 this year. This has been annulled by National Highway Logistics Management, and the value of the project, that was around 3,600 crore. They had emerged as L1 bidder for development, operation as well as maintenance of ropeways, but now it has been cancelled by National Highway Logistics, and that is why the company, that is why it's like a loss. It's actually will be a loss for the company, a big loss of around 3,600 crore. So the stock is trending lower around 3.28% as we speak.
That is GR Infra projects for y'all. Let's move on and talk about Cochin Shipyards on the charts. Osho today, Cochin Shipyards is up 13% itself. Last 6 months, 157% uptick. More upside expected, or maybe it's just time to actually start booking out profits?
See, overall, as you have mentioned, the counter has already given a very tremendous up rally in the current financial year. And from past 3 weeks, there has some kind of stagnation or profit booking that was already being seen in from past 3 weeks. So as of now, the 1000 psychological zone should be acting as a very strong support levels for this counter, and as it can be seen from today onwards that it has retracted or it has seen a very strong pullback of approximately 11% from the zone of 1000 levels. So here onwards one can expect that it can gradually consolidate near the zone of 1000, but on the higher time frame or on the higher time perspective, one can expect 1200 to 1300 to get retested in this counter in short to medium term time frame.
All right, that's the view coming in on Cochin Shipyard. Ankita, L&T, why is this one in the spotlight today?
Cheryl, L&T is in focus today on the back of a note that has come out by Goldman Sachs, and they are maintaining a buy on the counter, and they've hiked the target price to 3,140 rupees per share from 2,830 rupees. Now they see they will see a strong Q2 year-on-year growth in the order flow, revenue and net income, where they see a double-digit growth coming in for Q2 earnings. Also, they feel that it will reflect the next year's next few years of growth trends that will be, that they expect from L&T going forward. Also, they feel that the key monitorables are going to be the update on the international prospect base and ordering activity, and also the second half margin outlook is something that we need to keep an eye out for. And on the back of that, they're maintaining a buy on the counter, and we do see, an uptick of 0.4%, 0.5% uptick coming in on the counter.
Move on, and Kunal did talk about IDFC Limited, but Osho, you're going to give us a view on IDFC First Bank. So yes, the viewers are getting all the viewpoints on IDFC, but Osho, what are the charts indicating for IDFC First Bank?
See, IDFC is undoubtedly in the higher trend, is in the cycle of higher highs, higher lows. But what can be seen from the past 1 to 2 weeks, that it has consolidated near the 21-day exponential moving average, which is on the technical charts around 94 to 93 odd levels. And from here onwards on technical parameters, from today we are witnessing a strong positive crossover in this counter. So overall, the structure wise, it is having a very strong potential to again reclaim the zone of 100, and even I am expecting that now this counter has the potential to reach towards 108 to 110 in the short term period. And so therefore one can expect a strong rally in this counter, and even the short term traders should keep a strict stop loss around 91 to 90 odd zone, because from there onwards, if there will be any kind of correction, then we can witness a steep correction towards the zone of 85. But from here onwards, I am expecting that this counter should be testing the zone of 100 first, followed by 108.
100 first and then 108 are the levels that we should watch out for IDFC First Bank. Let's move on, talk about KEI Industries, one more brokerage note, and that is why the stock is in focus, because the Prabhudas Leader that has upgraded the stock to a buy from a previous hold rating and hiked the target price to 2,908 rupees per share from previous price of 2,390 rupees per share. They believe the positive for the long term, given the focus on diversification as well as of the product profile and de-risking of the business is something that could work out well for the company. Now, KEI Industries is also scaling up in terms of the distribution channel, that is 7 to 8% per annum, and a healthy balance sheet with a net cash flow of 400 crores is something that is making the balance sheet on the stronger side as well. Strong order book is already there for the company, 3,570 crores across the domestic as well as exports, EPC and cable business as well, and they expect a revenue growth of CAGR growth of around 16.7% over FY23 to 26 and a PAT growth of around 21.3% over FY23 to 26. So yes, an upgrade coming in by Prabhudas Leader on KEI Industries. Yes, off the day's lowest one, but still holding on to gains of 2.7%.
All right, that's KEI for you. But let's shift focus. Let's talk about Berger Paints. The second day in a row, you have a brokerage note that's coming on this particular counter with Kotak Securities, actually Kotak Institutions, going ahead and downgraded the stock to a sell from a reduced rating. They've cited an expensive valuations coming in for Berger Paints. They've, however, kept the target price unchanged at 500 rupees per share, implying an 18% decrease from yesterday's closing price. What Kotak is saying is that there's an irrational exuberance in the stock, even as the company has outperformed bigger rival, that is Asian Paints in the decorative paints market growth in the last 4 quarters. Apart from that, what they're saying is that rise in crude oil prices presents a risk to the company's FY24 margins. They flagged the muted demand in Q2 due to volatile monsoon as well. What Kotak is saying that the Berger Paints is more vulnerable than Asian Paints to GST Industries Paints business launch in Q4. So they are saying that Berger Paints is more likely to be impacted compared to Asian Paints. What they also say, GST is likely to avoid head-on battle with Asian Paints and focus to be on displacing second to the fourth inline brands in the dealer outlets is what Kotak's note is saying, flagging of risk for Berger Paints. Therefore, they downgraded the stock. Target is kept unchanged, but the stock is definitely taking a knock 1.4%.
Let's move on and talk about Hindustan Aeronautics and Osho. When you look at it, the stock has seen a very good move in the last 6 months, but specifically in the last 1 month, when you look at it, it's been quite subdued and almost flattish into a move there. What is the indication now coming in for HAL?
See, overall, the defense counter is looking very promising, even at today's perspective also. But when we are talking about the longer duration, then in the past 1 to 2 months, we have seen a time-wise correction after a strong rally in HAL. As of now, the corporate action of a split is about to come in the next week. So I'm expecting that there could be a strong buying emergence in this counter, and one should definitely try to add, because even on the technical perspective, from the technical point of view also, the counter has already seen a time-wise correction, and most of the technical indicators are about to give a very positive crossover on the various technical parameter perspective. So from here onwards, at current levels, one can expect 4,000 to 4,100 rupees on immediate basis, but after the split, obviously there will be changes in the prices, but one can definitely try to accumulate this counter from short or even from medium to long term perspective.
Alright, so that's the view coming in on HAL, but let's talk about Mankind Pharma then, Lisa, and why is this in news today?
Mankind Pharma is in focus because it commercialized the operations related to the pharmaceutical formulations, and this is at its newly set up plant in Udaipur, Rajasthan. And the company said that this will it will augur well for the company going forward in terms of its revenue. The management had highlighted in their con call last time, and this is a newly listed company which got listed in May, and since then it has given a return of around 26%, and even brokerages are quite upbeat on the stock. 53% have a buy rating on this stock. So that's Mankind Pharma. It's trending up around 1.6% as we speak.
Let's move on, and Osho, you picked up Granules for us on the charts. What is the indication now you're picking up for Granules? Last 6 months, almost a 24% return there. How much more upside can one expect?
See, from technical perspective, Granules have seen a very strong rebound from the zone of 290-300 odd levels, and currently hovering around 335-340 odd zone. But on a technical perspective, what we can see that there has been a very strong V-shaped recovery from the last month dip that it has seen. So from here onwards, one can expect the higher potential target of nearly 360 to 365 in short-term period. Overall, technical perspective, it is looking very positive, and even on the technical development or formation side, after formation of double bottom, we can witness a strong rebound in this counter, and as I have mentioned, 360 to 365 should be the target for short-term traders.
Alright, let's talk about a buzzer in trade today. Then Ankita, Eicher Motors, this one is seeing a good run in trade today, and why is that?
That's correct, Cheryl. Eicher Motor is buzzing in trade today. It is up almost 3% in trade. Now, it is coming on the back of the fact that Jefferies has maintained a buy on the counter and hiked the target price to 4,150 rupees from 4,000 rupees per share. And we'll see this rising competition concerns have weighed in 2023, but they feel that despite fresh competition, web search trends and channel checks suggest limited impact of that on this on the particular counter. They also believe that time is ripe to buy given the alleviating competitive concerns along with tailwinds that are coming in for the two-wheelers, demand recovery, industry premiumization and exports. And on the back of that, Jefferies has maintained a buy on Eicher Motors, and on the back of that we can see an uptick of 2.7% coming in for the counter.
Okay, let's move on and talk about another auto stock, and Bajaj Auto on the technical level. Osho, how is that one looking like on the charts? What is it that you're picking up now here?
See, Bajaj Auto in the mid-month of September, we have seen a very strong breakout in this counter. Approximately 49.50 was the zone from where we have seen a very strong breakout in Bajaj Auto. And in the past, we have seen a decent correction, or you can say even a profit booking in this counter, which dragged it towards the psychological mark of 5,000. But from here onwards, one can expect that 5,200 can be retested in, let's say, 1 to 2 trading session, and post that from there onwards also we are very much optimistic in this counter, and 5,500 is the target that we are expecting from short term perspective. So overall, on technical perspective, auto counters are looking very positive, and Bajaj Auto has seen a very decent correction or a cool off post the breakout from the lifetime high zones. So one can expect a very strong movement in the coming period from short term for short term traders only.
I want to talk about Anupam Rasayan. There was a news flow that just came in a short while ago where it said that the company has actually signed 3 memorandum of understandings with the government of Gujarat, a collaboration with afforestation on a total land area of 150 hectares. 50 hectares are located in Narmada district, 50 hectares located in Tapi district, and 50 located in Surat district. So on the back of that, we've seen a bit of a move coming in, on the positive move coming in there. But as of now, the stock has given up these gains and down almost 0.2%.
Alright, shifting focus then to CDSL Osho, and this one of late has been actually on a lot of people's radar. Right now we've seen an uptick of about 48% in at least 6 months right now. So where do you see this one headed?
See, overall this counter is looking very promising as of now, and one can expect a very decent up run towards the zone of 1600 and 1650. But as of now, the immediate resistance can be seen at the zone of 1400 and 1420. So once it surpasses the zone of 1420, then from there onwards we can be very much aggressive, or we can be very much bullish in this counter for the higher targets of 1650. But as of now, for short-term traders, one can definitely try to accumulate even at the current market price for immediate upside target of 1420. That is 100 points from here onwards.
Alright, moving on then, let's talk about Gland Pharma, and that particular counter is in focus in today's trading session. In fact, the stock has actually given up all of its morning gains, and the reason why it had seen an uptick earlier on in today's trading session. What Gland Pharma had got is they got the US FDA, the US FDA inspection was completed at the Hyderabad plant, and they got an EIR from US FDA, paving the way for the company to commence the output of 7 products for which it already had received a regulatory approval. So on back of that development, when it actually came out, the stock saw an uptick of as much as 2.5%, and was all set to snap a 2-day losing streak. But looks like third day of losses coming in for Gland Pharma. But yes, it was a positive development. The stock has reversed all of its gains.
Let's move on and talk about Dr. Lal PathLabs then. And Osho, on the charts, what is the indication you're getting for Dr. Lal PathLabs? Last 6 months, 33% return. Now, what is the chart indicating?
See, overall this counter is on a verge of breakout from the zone of 2470 odd levels. That means from here onwards, another 60 to 70 odd points can give a very strong breakout in this counter. Overall, we are witnessing a very strong cup and handle pattern formation at the bottom, which is a very strong technical parameter or technical development that can be seen in this counter. So once it gives a decisive breakthrough above the zone of 2470, then from there onwards one can expect another 400 to 500 points of rally in this counter. So one can expect 3,000 rupees of target for Lal PathLabs in the coming medium term time frame.
Alright, so that's the view coming in on Dr. Lal PathLabs, and that indeed is the last stock on this edition of Market Fatafat. Thank you so much, Osho, as well as Ankita, Lisa and Kunal for joining us on the show. But before that, let's talk about the GST Council meet, Vinny, because the GST Council is all set to meet once again on October 7th, and sources have told ET now that the Council will likely discuss the implementation of the 20% GST on online gaming, casino as well as horse racing. Let's go across to Prakash to find out what else would likely be on the agenda of GST Council this time around. Prakash?
Yes, an important development coming in as next GST Council meeting is going to take place on October 7. And it is expected that the Council may take some important decision. However, formal agenda is still under preparation. The sources are saying that the Council may discuss the implementation of new GST structure for online gaming, casino and horse racing. As you are aware, the GST Council has already approved uniform 28% GST on online gaming, casino and horse racing at full face value, and implementation is something which is very important for the GST Council to take it forward. This process has to be implemented from October 2023 as per the previous decision, but the GST Council is trying to review the current status, and before that it is required to make necessary amendments in GST Act. However, central government has already taken Parliament's approval for necessary amendments in IGST and CGST Act, but the state government is also required to make necessary amendments in SGST Act. That is something which will be discussed by the GST Council, and current status will be reviewed. Apart from that, sources are also saying that some GST compliance related issues are also there that could be there for the GST Council for a discussion. In addition to that, one important agenda is also there which is expected to be there as a formal agenda for the GST Council for discussion, is with regard to new GST rates on millet based products, and that could be brought into 0% category. So these are the important expected agenda that could be there for the GST Council for a discussion.
Okay, thank you so much for that, Prakash. But with that, it's a wrap on this edition of Market Fatafat. It's a goodbye from Cheryl and myself. But as we sip into the break, listen into what Sanjeev Bikhchandani had to say in terms of the funding winter. He said it's not a funding winter, but it's careful funding. That's a word coming in from the Executive Vice Chairman, Sanjeev Bikhchandani. Listen in.
Funding never went away, right? It just became more discerning. So lots of money, but people are now funding very carefully. Maybe valuations may be a bit muted. Maybe the velocity of funding may be slow. Maybe some of the bets people are taking may not be that speculative. But funding is there.
Funding is there, but which sectors are you bullish on?
We invest in tech, and obviously I see a lot of tech companies, whether it's, I think AI, deep tech are emerging. I think fintech remains interesting. Health tech, I think supply chain automation. These are the areas we're looking at.
Right. So what do you also make of the fact that some of the unicorns are now turning profitable as well? If we look at some of the data, Zomato turned profitable for the first time since its listing in Q1 FY24. Nykaa again and Meesho as well. Do you see this momentum continue for other startups as well, seeing the global headwinds that they have not really waned?
Well, I think it's pretty clear investors are giving a signal to the startups they invest in to get to profit. Now, many will do that and get there, and some will not be able to, and they will have a challenge.
Right. And how does employability look in future? Because, there's a lot of talk around AI actually replacing jobs, while there's a certain faction that says that, there will be no job loss, but we can reskill people and people will need to sort of up their skills. But where do you see companies moving on that?
So we do not see any impact of AI for job losses just yet. I do think, however, that there will be some amount of retooling, reskilling in organizations as AI begins to move in. Right. But I don't see widespread job losses.